So what is a credit score? How is it calculated? And what does your credit score say about you? So in today's video, we are going to unpack all of the answers to these questions and also give you a few tips to help you kickstart your credit repair journey. So let's jump right into it. Welcome to Bella's Credit Corner. My name is Bella, and here on my YouTube channel, we focus on everything related to financial literacy. So that includes budgeting, saving, investing, and credit. So if you are new to me and my channel, welcome. I'm so excited to have you here. So feel free to click that subscribe button down below and then hit that notification bell so you will be notified when my future videos are posted here on YouTube. Now, if you are a returning subscriber, I'm equally excited to have you here, and thank you for coming back to watch today's video. So when it comes to credit, many of us just did not learn about credit itself and how it works. So we kind of had to learn through the school of hard knocks life, right? And so for some of us, we did an amazing job learning about credit, how to use our credit properly. But then there are others of us who kind of struggled with credit, didn't know how it worked, and we did a horrible job of managing our credit. So in today's video, I wanted to take it back to the basics and just cover what is a credit score, how is it calculated, and also want to give you a few tips to help you in your credit repair journey, and also cover what does your credit score say about you when a potential lender or bank is looking at your score and your overall credit report. So let's jump right into today's conversation. So what is a credit score? Well, a credit score is essentially a financial grade that is given or calculated based on a formula. Now, that formula will look at different metrics to ultimately calculate your financial grade, also known as your credit score. Now, here in the United States, there are several scoring models that are used to calculate credit scores, but the number one scoring model that is used by most banks and financial institutions is known as your FICO score. Now, your FICO score is comprised of 5 different metrics that are looked at to calculate your final credit score. So let's look at each of these components one by one. In this pie chart, you will see the 5 different metrics that are looked at and essentially used to calculate your FICO score. So 35% of how your FICO score is calculated is based upon your payment history. So how good are you at paying your bills on time? So if you are someone who has a very clean history of making payments on time, your FICO score essentially will tend to be higher. If you are someone who tends to have a few or many late payments, whether they are 30 days past due, 60 days past due, or more, your FICO score will tend to be lower. Now, the next component or metric that is used to calculate your FICO score is utilization, and that makes up 30% of how your FICO score is calculated. Now, utilization essentially means how much of your credit that's available to you are you in fact using. So let's walk through an example together. So let's say you currently have a credit card and the credit limit is $10,000. And you are currently using or have a balance of $9,000 of that credit limit. So your utilization is going to be 90% because you are using 90% of your available credit. Now, let's say you pay off this balance and you pay it down to $1,000. So now you're only using $1,000 of your available credit limit. So your new utilization is going to be 10%. And so with your FICO score, when you do tend to have high balances, meaning you owe a lot of money and you are using a lot of your available credit, your FICO scores will tend to be lower. Versus if you are someone who pays your credit card balances in full, or you keep your utilization low, ideally less than 30%, your FICO scores will tend to be higher. The next metric that is used to calculate your FICO score is the length of your credit history. So how long have you had access to credit? So if you are someone who is younger and you have a relatively new credit profile, right, this may cause your credit score to be a little bit lower. Versus if you are someone who is a bit older and have been using credit for a much longer time, this may help you, in fact, and you may see your scores are a bit higher. But again, this is only going to make up 15% of your overall FICO score. So don't worry too much about it if you are someone who is relatively new to credit. Then the last two metrics that are used to calculate your FICO score are new credit, meaning how much new credit have you attained in the last 2 years, and also credit mix, meaning what types of credit do you have on your profile. So when we say types of credit, meaning do you have a mortgage? Do you have student loans? Do you have a car loan? Do you have credit cards? Do you have personal loans, right? And this makes up a very small portion of how your FICO score is calculated. It's 10% for credit mix and then 10% in regards to new credit. So while you can focus on these two components to help boost your scores, they aren't going to move the needle a whole lot, which is why you want to focus on the two bigger pieces of this pie, which are your payment history and your utilization. Now, let's talk about what your credit score says about you when a lender looks at your credit score and overall credit profile. So if you have a credit score that is below a 580, this is classified as a poor credit score. So when you are in this category, you will have a very hard time being approved for credit. Now, in the event you may be approved, it is going to come at a very high cost and also some stipulations. For example, if you do in fact get approved for a loan, they are going to charge you a very high and egregious interest rate. They may also require a co-signer to sign on the contract, meaning this person is going to be on the hook to pay this debt in the event you do not pay or default on the loan. Or you may see a situation where, let's say you're trying to rent an apartment and you have a low credit score. They may require a higher security deposit. So let's say someone who has great credit only has to pay 1 month's worth of rent as that security deposit. You may have to pay 2 or 3 months of a security deposit because of your low credit score. So these are all the things that come into play or can potentially come into play when you are applying for credit when you have a credit score that is below a 580. Now, if your credit score falls in the range of between 580 and 669, that will be classified as having fair credit. So in this category, you do have more of a probability of being approved for credit, but depending upon where you fall in this range, you also may be charged higher interest rates. So if you fall in that range between 580 and 620, that is still that gray area where you may actually be denied for credit. But if you are approved, you probably are going to pay a really high interest rate. If you kind of fall in that range between 620 and 669, you will have a better probability of being approved for credit. You won't be charged as much interest as the person who has poor credit, but you are not going to get the best rates out there. So you are in a good range, but you want to work on improving your scores so you can essentially be charged lower interest rates. Now, if your credit scores fall in the range between 670 and 739, you have good credit. So you are in a great position to apply for credit and have a really good probability of being approved. You can also shop around if you are looking for better interest rates. Now, if your credit scores fall in the range of 740 to 799, well, you have very good credit. So you are in a great place to shop around for not only the best interest rates, you also have a lot of bargaining power to get the best deal possible. And then of course you have anyone who has scores that are 800 and above. Well, you have excellent credit. You have stellar credit and you are creme de la creme. And so without it being said or having to go into detail, you know you are in the best place possible to shop around and also get the best deal, because banks and lenders really are looking for customers like you. Now, if you are someone who has poor credit, fair credit, good credit, but you know you really want to improve your scores, I want to now talk about what you can do to start working on improving those credit scores. So let's discuss a few things you can do to ultimately start improving your credit scores. So the first thing I would recommend is, if you do have any accounts that do in fact have late payments, work on bringing those accounts up to date. Reaching out to that lender to see if you can make a payment arrangement. Can they ultimately lower your monthly payments to something a bit more affordable? Can they defer some of those payments to the end of the loan potentially, so you can essentially start fresh? And then you will just make that loan term a bit longer, but at least you can kind of have this account back up to date and stop those annoying collection calls. The next tip that I do recommend is signing up for a secured credit card. So secured credit cards are really great for anyone who is in the need to establish credit, or if you need to reestablish credit because you have had credit challenges in the past. Now, this secure credit card is not going to fix any of the negative activity that's already on your credit report, but they do give you an opportunity to essentially have a fresh start and reestablish your credit worthiness. So I will put a link to a video up here about one of the secure credit cards that I highly recommend. So feel free to check that out. I will put a link to that video also down below in the description box. Now, as someone who has gone through her own credit repair journey, I definitely know how it feels to have bad credit. But I also know how it feels to put in the work and then have really good credit. So if you are new to me and my channel, it took me 2.5 years to fix my own credit to where I could ultimately become a homeowner, and not only become a homeowner with my husband, but we also got a really good interest rate of 3.3%. So I am talking from a place of experience. I know how it feels, but what I can say, bad credit is not a life sentence. Wherever you are today in your credit journey does not dictate where you can be in the future. You have to just start putting in the work. So I do hope you took today's video, the tips, the information, and will start to implement and embark on your own credit repair journey. So let me know in the comment section below, where do you fall in the range in regards to the different credit scores, and what have you done in the past to improve your own credit? I would love to hear your feedback and comments on this topic. So again, thank you for stopping by and watching today's video. Don't forget to like, share, and subscribe, and I will talk to you soon. Take care.